Hello and welcome to this week's MasterChartsTrading.com market recap of the week ending Friday, November 14, 2014. Once again, I apologize, I do have a lung infection and my voice is a little weak. So this week we will cover several items. The S&P 500 is very overbought, but overbought doesn't mean that is weak. Overbought just means that the market participants have pushed the prices very high, very quickly. Market breadth is also very overbought, and this is more concerning to me. I'll explain why. The Russell 2000 small cap index might be running into resistance, and if it does roll over here, it would be my first go-to for a short. The bonds are trading within a tight consolidation range, and we'll see which way it will break will determine the immediate bias. Gold miners, and by extension gold, began its counter trend bounce on Friday, and that's one of those tradable counter trend bounces that I'm actually playing. And some of the SPDR funds are showing signs of profit taking or exhaustion on this upswing. So we'll begin our today's presentation with S&P 500, which from our entry point on October 21st gained about a little bit over 7%. The last, and you can see that it is very overbought. This is price momentum oscillator, just a regular indicator. Overbought doesn't mean that it's weak, but overbought means that further upside may be limited. So let me show you what I mean about the market breadth being overbought. So this is a plot of S&P 500, and this indicator right here, I covered it in one of my previous videos. It's called ITBM, intermediate term price momentum oscillator, breadth momentum oscillator, I'm sorry. So it registered a reading of over 200, and this is one of those rare events that it showing such very overbought reading. The two times previous that I was able to find this kind of level of over 200, the price of S&P 500 on one occasion immediately rolled over to the downside, and on another occasion in 2010, that's in about just a few weeks afterwards, a flash crash happened. Now I'm not saying that we're going to crash, but I am saying that this is one of those times where I would be very cautious about adding new longs to the already open position. As a matter of fact, I did take some profits here already. And okay, so the next on the agenda is the Russell 2000. Russell 2000, by my book, was a long-term downtrend because of this double top here, and then a lower high and a lower low right here. So this, in my book, is a counter trend bounce. It's a very strong counter trend bounce, about almost 8% up. But as you can see, it's running into resistance right here from a previous peak from the September 2nd, I believe. So it's running into resistance. If it does roll over here, first sign that it rolls over would be price momentum oscillator would cross its signal line would cross the price momentum oscillator right here. And second, the Arun red indicator would surge to 100. When or if it does do that, I would be considering this a good place to go for a market short, because it is still technically in a downtrend, because this peak right here has not yet been exceeded, and if it rolls over here, that means that we're making a series of lower highs. It hasn't happened yet, but if it does, that to me that would be a good place to be short. Bonds, I did issue a preliminary buy signal right here last Friday, based on the several reasons that I explained in the past. Nothing really happened here. It's just TLT is still consolidating within a tight trading range, and any breakout above 120, a close above 120, or a breakdown below 118, close below 118, would provide for a immediate bias. My money is still on the upside, mostly because the market is so overbought. The stock market, I meant, is very overbought, and the logical place for money to rotate into would be the bonds. Should the price confirm and the price close above 120, I will add to this already open position, and vice versa. Should I be wrong and the price does not confirm and the price drops to below 118, I will simply close this position with a small loss. This was a small position to begin with. The interesting thing that happened this Friday is a GDX, market vectors gold miners ETF. Excuse me. As this is a long-term GDX and gold miners and other gold-related equities, gold itself has been in a downtrend since 2011. So shorting any rallies would have provided with very nice profit. For example, this last iteration is about 29% profit. It was on September 3rd, and then we closed the position this last Friday and went actually long. So I'm long GDX right here for a counter trend bounce, a small position properly sized. This is a very volatile security, so you have to be basically careful as in not to size your position properly. So in one of my next videos I'll be going over risk controls that I use based on the volatility and based on the fact that this is a counter trend bounce. This is a rather small position. Some of the funds are already showing signs of profit taking and exhaustion. So one of the funds is XLF, which is a Financial Select Sector SPDR, and the top holdings are Berkshire Hathaway, Wells Fargo, JP Morgan, Bank of America, Citigroup, etc. It was a very nice bounce from October 20th, where the entry would have been. It's up about 8%, but as you can see right here, the price momentum oscillator has already rolled over. Does it mean that the fund will also roll over? Not necessarily, because for example you could see here price momentum oscillator rolled over, but the fund actually continued higher. It's just a sort of first warning that the momentum has sort of exhausted itself. The next sign would be when red Arun would surge to 100. That's when the position would be closed. Now let me show you energy. Energy ETF XLE, I highlighted it several times in the past, but it's just really having a hard time because of the oil continued slide. From the bottom it's up about 7%, but it's really difficult to pick bottoms, so our entry point would have been on the October 21st here, and we're up about 2.5%. I decided to go ahead and actually take some profits off of it because I'm afraid that oil may actually be headed even lower. So I'm not sure, when it will roll over, and this is a rather volatile security as well. So I decided to lock in some profits, and I have about you know, half a position still open right here. And finally, the XLU, utility sector SPDR, and top holdings at Duke, etc., etc. Also had a very nice bounce. Even earlier, it started October 7th. That bounce resulted in about 6% to now. But you could see price momentum oscillator rolled over. Actually, it rolled over twice. It rolled over here, but this is like, you know, one of the it just was too quick. You know, it just came up and immediately rolled over. But here it's, I believe this one more, so it definitely rolled over. So the momentum up momentum is definitely slowing down, and you can see the green rune is getting really close to 0, and most likely red rune will surge to 100 here. So XLU is bearing the brunt of the selling. It's down about 3.5% from the top. That was November 7, I believe. And so once again, even though S&P 500 is still eking out small gains, there are definite signs of selling and profit taken in the market. That's it for this time. Thank you for listening, and please make sure to sign up for our mailing list at MasterChartsTrading.com, or connect to us through one of the Twitter, Facebook, StockTwits. Send us direct email, or or go to this address here, StockCharts.com public 1229403. That's where we keep our all of the charts that you see on this presentation, and then of course YouTube channel. That's it for now, and thank you for listening. Have a great weekend.